If your bank shuts down tomorrow, your money might still exist, but you might not be able to touch it. Think about that. You see numbers on a screen, but who actually controls those numbers? Because here's the uncomfortable truth. You don't fully control your money, and by the end of this video, you'll know exactly who does. Let's start simple. You work hard. You earn $1,000. You deposit it into your bank account. That money is yours, right? But here's the strange part. The moment you deposit that $1,000, it stops being physical cash. It becomes a digital entry in a banking system. So where did the real money go? Now, think about this. If 100 people deposit $1,000 each, that's $100,000 inside the bank. Do you think the bank keeps all $100,000 locked away in a vault? No. They lend most of it out to someone buying a house, to someone using a credit card, to a business taking a loan. Your money becomes someone else's debt. Now pause. If your money is being lent to someone else and that person can't pay it back, what happens to you? This is where it gets interesting. When you deposit money legally, it becomes the bank's liability. That sounds complicated, so let's simplify it. Imagine you give your friend $100 to hold, but instead of holding it, he lends 90 of it to someone else. Now 3 people believe they have money. You think you have $100, the borrower has $90, your friend keeps a little in reserve. See the problem? The system works on trust, but what happens when trust breaks? In 2008, it did. Banks had lent too much, housing prices crashed, loans went bad, people panicked, they rushed to withdraw money, and suddenly banks didn't have enough cash. That's called a bank run, and the entire financial system almost collapsed. So who saved it? The government stepped in, but more specifically, the Federal Reserve. Now ask yourself this, why does the Federal Reserve have the power to rescue banks? Because they control the money supply. They can create new money digitally out of nothing. Now think about that. If someone can create money, who really holds power? Let's go deeper. Today, most money isn't paper, it's digital. When you check your balance, you're looking at numbers in a database. So who controls that database? The banks. Who regulates the banks? The government. Who influences how much money exists? The Federal Reserve. See the layers? So far, we've learned something uncomfortable. Your money doesn't just sit in a bank, it moves. And when money moves, power moves with it. But here's the strange part. You still feel like you own your money. Why? Because you can access it. Ownership feels like control, but access is not the same as control. Now imagine this. If the system freezes, if regulations change, if your account is flagged, can you instantly access everything? Not always. And that's the difference. So who really controls your money? Let's break it down simply. You control your decisions, where you bank, how you spend. Banks control where deposits flow, who receives loans, the infrastructure. The Federal Reserve controls interest rates, money supply, liquidity in the system. The government controls regulation, legal enforcement, deposit insurance. You are inside the system, but you are not at the top of it. Now, here's the empowering part. The system isn't dangerous because it's complicated. It's dangerous because most people don't understand it. The entire financial world runs on trust. Trust that banks won't overlend. Trust that governments won't overprint. Trust that people won't panic. And when trust holds, the system works. When trust breaks, everything shakes. So do you control your money? Yes and no. You control your actions, but institutions control the structure. And real financial intelligence is understanding that difference. Because the moment you understand who controls the levers, you stop being confused. You stop being blind. You start thinking differently. And if you think this is powerful, wait until you understand who really controls interest rates. That's where the game gets even bigger.